welcome to Cash Flow. I'm so glad to be here this week. I got to tell you, I'm just back from an amazing trip to Iceland, and I'm not going to go through all the details, but I will tell you that looking at that scenery and the landscapes there was amazing and peaceful. And one word kept coming to me: simple. Simple, simple. Keep it simple. Life can be kept simple in and amongst all the craziness that we're dealing with day to day. So what I want to do is move us towards making your finances in your business and in your personal life simple as well. So what we're going to do over these next 3 episodes is just answer your questions. I have about 30 questions. I don't know that I'm going to get to them all over these next 3 episodes, but I'm just going to go through them one at a time. I haven't prepared any answers. I've literally popped the questions in a list that I'm going to look at, and I've made a couple of notes, but nothing significant. And the only notes, I'll tell you what they say. They say KISS, keep it simple, stupid. I need to keep it simple because you need simple answers to what are sometimes pretty complicated finance questions. And you don't need to know how to ask them. You don't need to feel like you're the only one asking them. So that's what we're going to do here in these next 3 series, is gather a bunch of these questions, which I've got right here. You'll have to forgive me. I'm going to glance at my computer because I'm going to be going through these one at a time. And we're just going to give you a simple answer to each one. Sound like fun? All right, I'm just going to dive right in. For your own sake, know that the dogs are crazy today and they haven't even started their walk yet. So at some point, they're going to start barking like mad. But it wouldn't be me in the Cash Flow podcast if that wasn't happening. So let's jump in here. And I'm going to look at the very first question. And right on top of it, I'll tell you it says KISS for keep it simple. The first question: what is cash flow? So you're in rooms and you're hearing people talk about cash flow all the time, and it sure sounds great, right? Cash flowing, hopefully coming into me. Cash flowing out, not so good. But what does it really mean? To keep it as simple as I can, what it's describing is not just how much money comes into your business from what you sell and how much money goes out of your business for the stuff that you have to buy or pay for, but it's when does that happen? What is the timing around when cash comes in and cash goes out? So the really important thing to know here is you're not just asking how much money is there. You need to also ask, when do the things happen that make the money come in and out? Just going to give you a really simple example here because a lot of folks that I work with actually run into this problem. I've just made a great sale. I'm going to get $3,000 from my customer, and they're going to pay me in 2 months. So cool, I got $3,000 that's going to come in. If I don't know the timing of that, all I know is, oh cool, I have $3,000 coming in. And say that I have to spend $2,000 in order to provide whatever service I'm providing. So now I know 2 things. I know $3,000 is coming in, $2,000 is going out, and what I might say to myself is, awesome, I have positive cash flow of $1,000. And while that's partially true, it's not true right now in this time slice, right? So that's why we have to add this time factor to it. If I'm not going to get that $3,000 for 2 months, but I have to pay for the stuff that I need to buy between now and the end of 1 month, then I've got a pretty big gap there, right? I've got to put money out that I don't have. So our cash flow is actually going to be negative for a little while until that money comes in from the sale that I made. So that's the only point I want to really make here. When somebody says cash flow, when you're talking about cash flow, when you're thinking about cash flow in your business, don't just think about how much money's coming in and out, but think about when it's coming in and out. Hope that helps clear that one up. All right, let's move on to our second question. I love this one. It's a favorite, and I'll tell you, it's come from many people that I've worked with. Profit looks good. Why am I broke? You know, this is actually probably the most asked question. You look at your profit and loss statement that that your bookkeeper hands you, or you think about, say you don't even have a bookkeeper and a P&L or a profit and loss or an income statement. You know in your head, I'm charging $5,000 for something and I'm only paying $2,500 to do it. So my profit's $2,500. Why am I broke? This actually ties a little bit into the previous question. Your profit and loss statement is only telling you one thing. It's only telling you how much you're selling something for and how much you're going to pay to provide it. And again, guess what it's leaving out? It's that really interesting piece that turns this into a meaningful question: time. If you don't know when the cash is coming in and you don't know when the cash is going out, and you're just looking at one piece of paper, or you're thinking in your head very simply, I charge 3,000, or 5,000, I'm paying 2,500, I have profit of 2,500. And then you look at your bank account and you go, where's my $2,500? Well, very simply, it's just that your customer hasn't paid you yet. They're not going to pay you for a while, but you have to start putting money out to pay to be able to provide the service to that customer. Very often, that's the situation. There are complicated ways to talk about it, but in its most simple fashion, if you're profitable on your profit and loss statement or in your head, and yet you look at your bank balance and it's not going in that same direction, it usually means you're just waiting too long to get paid. Now, what can you do about that? What are some simple things you can do about that? Well, there are a couple of things. I'm just going to give you a few that we use with some of my clients. One is, if you have offer a service or you sell something and you don't get paid for 30 days or 40 days, or maybe it's paid monthly over time, what you can do is reach out to your customers and say, hey, I'll tell you what, I'll give you a discount if you want to pay me all of that right now. And it doesn't even have to feel desperate. It's not desperate. What you're really doing is saying to the customer, hey, I really value what we do here, and I want to continue to grow this and serve you. So in order to invest in that growth, I'm going to give you this opportunity to pay me early, and that way I can go ahead and invest and get better and better service for you. So that's the first thing we do, which I really, really like. That's one of my favorites when times are tough and cash flow is a little rough. The second thing you can do, you see I juggled, time's rough. The second thing you can do is think about when you have to pay for your expenses. So a little trick about credit cards here. Now, I'm not in this conversation saying, oh, you should have credit cards or you should not have credit cards. I'm not even talking about that. I'm just saying, if you happen to have a credit card, whether you pay off the balance monthly or you pay it, over time, every time you use a credit card, you're putting off how long it is until you actually have to take the money out of your bank to 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 pay for whatever it is you're paying for. So think about that as like a 30-day leeway. So if you get something, buy something on the day after your credit card cutoff statement, okay, you're not going to have to pay for it until 30 days after that when you get your next statement. And there's actually a more complicated way to drag that out to 45 days, but I'm not even going to go there. I'm just going to say, think about credit cards. And if you kind of go, credit cards, I don't like that. I don't want to get in credit card debt. I've been there. I don't want to do it again. Then look at it this way. Don't call it a credit card. Call it a cash flow accelerator, and make sure that you know you're going to get the money in from your customers soon enough to pay it off, so that every month you're able to pay it in full. No interest gets accumulated, but you buy yourself 30 days of time. So doing that will help take that difference out from between what you're seeing on your profit and loss statement and what you're seeing in the bank. Hope that helps. Okay. Drop in the comments if you have questions on that, or if you want me to elaborate a little more on some other things you can do to help bridge that timing issue that makes our profit and loss statement just look nothing like our bank account sometimes. Okay. Question number 3, and again, all I'm doing is looking at the questions and then I'm winging it, because this is just stuff. What I can promise you is these questions are the questions you have, and I've answered them over and over and over again, and I deal with them in my own business and in my own life. So that's why I know that you're listening to the right person to get some answers around this stuff in just plain English, simple, to the point. Okay, what is the biggest mistake people make with cash flow? Well, I think I'm going to be pounding on a theme here. The biggest mistake people make with cash flow, honestly, the very first one is missing that element of time that we've been talking about. We should call this version of the podcast the time session, because what the biggest mistake people make is asking that question we just asked. It's not knowing how long it's going to be before your money comes in, so that you can be sure you have money in the bank to cover your expenses. It's really that simple. The one thing you can do to fix this, if you do have, if you do have this, are making this mistake, as we've all made as entrepreneurs, because we don't really understand it till it happens to us, right? The biggest thing you can do is understand very clearly, write down for yourself on a piece of paper, scribble down on a piece of paper, I'm going to get paid this day, this day, this day, this day, and this day. These are the days or the dates that the cash is going to hit my bank account. Just doing that little exercise, if you have a monthly subscription, for example, and you get paid $100 a month by 10 people, don't just write down, oh, I'm going to get $1,000. Literally write down when you're going to get each $100 every week or every day, even if you want to get a little crazy, so that you really understand or start to accept the fact that cash flow is about timing. So that's the number one biggest mistake. There are other mistakes people make with cash flow, but most of those really involve how they're pricing things or the way that they're choosing to run the operation to generate that revenue. But the very simple answer is keep time in your decision process around your spending. Okay, let's see. Francis, do I have time for one more? Okay, I love this one. How often should I look at my cash flow? And the simple answer, I hate to say it, but the simple answer is it depends. All right. But I'm not going to give you that answer. I'm going to give you an answer that I would actually use whether I have no money or whether I have all the money in the world. And I'll tell you why. If I have no money, I need to be looking at my cash flow daily or weekly at a minimum. And let's even say weekly at a minimum, but why not daily? Okay, why can that not be a 5-minute exercise every morning to say, what's in my bank? How much money is going to come in this week? How much money is going to go out this week? Look at it again tomorrow and make sure it's doing what you thought it was going to do. Literally 5 minutes. Just pull up your bank. I literally have my bank saved as a bookmark right on in my Google Chrome and in Safari. And I can just click on it, and in a second, I can see right there on one page, here's how much money I have, here's what came in yesterday, here's what went out. So I think you should look at it every day. That said, minimum weekly. Now, one of the things you're probably thinking is, well, if I have all the cash in the world, why should I look at my cash flow weekly? Because I will tell you the secret that I learned from working 30 years in corporate is a lot of cash covers a lot of sins. Because what'll happen when you have cash, and you have cash, is you'll take your eye off the ball on making sure that you're managing all the things in your business the way you should manage them. Because you don't have to. You've got this cash cushion that'll help you. You can go, oh, if I make a mistake, I've got, $100,000 in the bank. It'll take care of that. But guess what happens over time with that as a business owner, right? You eat up that $100,000, or worse, you're building a business that's not efficient, that's not effective, and that's going to limit your ability to be able to run that business long term. So I think weekly, whether you're making all the money in the world or whether you're struggling day to day, as a lot of us are today, to make sure that your bank account doesn't go negative. All right, that's it for this week's Keep It Simple, Stupid. The stupid pointing at me, not you. Your questions are important. My answers need to be simple, and I'm dedicated to that, especially over these next 3 podcasts. Enjoy, and I'll see you next week.